So hi everyone, and welcome to this panel discussion on how Australian neobanks are adapting to the changing conditions this year. I'm Malcolm McNaughton from Backbase. At Backbase, we work with banks of all sizes around the globe, helping them deliver digital banking experiences that their customers love. In our discussion today, we're going to be exploring how some of the events of this year are affecting Australian neobanks and how three banks in particular are responding. I'm personally really looking forward to the views of our panelists on how the market's going to evolve from here and how neobanks can contribute to the future of Australian banking. For our discussion today, we've got leaders from three of Australia's best known neobanks. We have Jackie Colwell, co-founder at Judo and currently serving as Chief Risk Officer. Welcome, Jackie.
Thank you.
We also have Dominic Pym, co-founder of Up. Nice to have you with us, Dom.
Thanks for having us, Malcolm. Appreciate it.
And we also have Steve Weston, founder and CEO of Volt. Thanks for being with us today, Steve.
Thanks, Malcolm.
So let's get started. There's plenty for us to discuss. If I can start with you, Steve. So you recently announced a partnership with Microsoft on a banking as a service offering. For viewers that may not be aware of that, would you like to explain what you're working on?
Demystify. What is this Vault 2.0? In fact, if I go back a few years ago, and I remember actually talking to Dom about technology, it wasn't a strong suit. Dom, do you remember those?
I remember that.
Conversations? And what effectively we said that we wanted to build was technology, banking technology of the future. And if you look at almost all industries on earth, platforms have become ubiquitous, but not so much certainly in retail banking, but what we've built is a platform. It really serves three key purposes for us. The first is to provide all of the banking and non-banking products and services that customers need to live better financial lives, whether they're manufactured by Volt or insourced from third parties. The second role of the platform is to work with corporates who have access to large customer bases and they want to offer banking and payment products and solutions to their customers or to their loyalty members, and they want to do it through their own ecosystem, so through their own app or web, but they don't want to become a bank themselves. That will be a large part of Volt, and that's what Volt 2.0 really powers. There is a third role of the platform. It is something that will have a longer gestation period, and it needs to be proved out, and that is that we will look to license our technology out to other banks, and of course banks of all sizes and of all locations are grappling with this notion of digitally transforming. The question is there another way? Can you work with a neobank that's architected its platform such that it can be licensed out by other players? Now, we will look to that third role, firstly here in Australia with smaller banks, and if we can prove that model out, that will become the global play for Volt, and working very closely with Microsoft.
It sounds exciting. Dom, moving to you, I think you'd have an interesting perspective on this, right? On this kind of banking as a service model, given Up's been built on top of some core banking capabilities from Bendigo. How significant a role do you see this kind of model playing in the future of Australian banking?
Yeah, I think it's perceptive of what the future holds. Probably there's really two approaches to delivering these technology solutions, and one is to build it yourself and the other is to work with partners to build it out. And I think we're seeing more and more of that. In terms of our experience and pedigree, like we've been doing this now for nearly sort of 10 years, I guess. And we've been working very closely with the Bendigo and Adelaide group. They have probably, I think, more than 10, maybe a dozen different banks brands within their group, and I think at the moment 3 or 4 of them are using our platform in order to service their customers for their mobile and internet banking, and so that's sort of been a really good opportunity for us to develop that kind of banking as a service type model. We also licensed the platform that we developed several years ago to a few of the bigger banks in Australia and overseas. And those projects never really got to customers. They sort of ended as, if you like, proof of concepts. But I think they were spearheading some of the work that that we've seen from other sort of banking as a platform providers around the world. And so I think that definitely it's the future. In terms of what we've been able to do with Up, we wanted to learn from that experience that we had working with Bendigo delivering their internet banking, for us to be able to have a direct relationship with the customer and deliver a new platform that could deliver sort of innovation and functionality over and above what we'd been able to do before. We're still integrated, as you said, with those core systems, and they're 1960s mainframes. So probably one of the interesting things I think that we've found is that over the last, say, 10 years, we've integrated with probably half a dozen or more different core banking systems. And the core banking system itself is really just a dumb ledger. It doesn't really matter. You don't have to build the logic into the core banking system. I think that's a mistake that people could make. If you have one eye on the future, then you can build a great customer experience, great engagement, great channel management, great features, functionality, user experience, and that can be back-ended by potentially legacy systems or potentially cloud-based systems or potentially on-premise systems that are modern and up to date. So I don't think we should worry too much about the systems that are sort of the source of record. We should be more worried about how we deliver this banking platform, this banking as a service, in order to customize and deliver a unique user experience for different cohorts or different customer groups. And I think that's sort of where banking has been heading, and certainly that's the stuff that Steve was talking about that Volta focused on.
And do you have a sense for, in terms of proportion, what this kind of layered model might account for in the marketplace? Will it become a meaningful share of the market that is served with different providers contributing different layers like this, in contrast to the monolithic banks that have most of the share today?
Well, I think Backbase have been doing it for a long time, right? But there are other players. I don't know, for example, Sandstone, and there are other players that have had different models, whether they be a white labeling approach or whether they be a platform approach or a banking as a service approach. There's been many different sort of market approaches. I would say in Australia, we've seen a lack of collaboration between those banking as a service providers and the fintechs and the major banks. What we've seen since Ferocia and Bendigo have been working together with Up is that we've seen a bunch of others come along. So obviously like Doe and Regional Australia Bank is one. Revolut have launched in the Australian market, and they've been working with incumbent banks like ANZ and others. So I think that we are starting to see a little bit more momentum, whereas overseas, organisations like, for argument's sake, Fedor, there's lots of them, but them, for example, they've proven across a dozen countries or more, whatever it is, many banks have adopted this model. We're probably a little bit more incumbent at the moment in Australia with a really solid, sort of reliable, trustworthy financial system. We haven't gone through the same turmoil that we've seen in America and in Europe. But in the last 10 years, that turmoil has sort of led to people investigating and looking at, or companies looking at, different models and different ways to evolve. We haven't had that same impetus in Australia, but now with the neobanks launching and that sort of, I guess, chomping at the heels of the incumbents, we've now seen these different business models starting to take shape and starting to evolve. But I feel like we're really at the infancy of it, and over the next decade, we'll see it growing out and becoming more commonplace.
Right. So Jackie, thinking more specifically of the SME segment, in recent years, we've seen some increasing disintermediation of banks with, strong growth in brokers, for example, and growth in alternative providers. How do you see this sort of model evolving in that segment? And, from your perspective, what are the competitive advantages for a bank like Judo that does operate end to end?
Thanks, Malcolm. Look, I actually see both sectors continuing to grow. I think the alternative, finance providers, whether they be neobanks or whether they be in the non-bank sector, I think what they've started to do really well is all try and find a niche area in which to play and specialise in that, and use technology or greater access to data to help support them. So rather than trying to be everything to everybody, they try and do one thing really, really, really well. So whether that be, we've seen a lot of growth in the invoice finance space, the payments space, that they start to really specialise in that area, and don't try and be, as I said, everything to everyone. So I think that makes it hard for the players who do try and do everything, because it's hard to keep up in every, have you got the best mortgage product? Have you got the best payments product? So it becomes harder to keep up. In terms of brokers, and I'm referring here largely to commercial brokers because that's who we deal with. I think they will continue to grow. They're now roughly, involved in over 30% of commercial loan transactions. But I think access to finance in the SME community is becoming more complex given the constantly changing risk appetites, policies, and also access to bankers in this current environment. So I think, whilst they're continuing to provide value to customers, I think that space will continue to grow because there will be greater complexity, more players in the market, and people will want help to understand what's the best choice for them. For us at Judo, I see some of those advantages for us in some of what I've spoken about. We specialise in SME. So, we're not a payments platform provider, or we don't do consumer mortgages. So we've tried to just build an end-to-end in that SME space, specialising on that. We do work closely with brokers. 80% of our customer base does come from the broker channel, but we've adapted our model, or the traditional model of working with brokers, to be one that still focuses both on a relationship with our customers and with our brokers.
You mentioned access to bankers. I think that's supposed to get easier, right? Someone's hiring 500 of them at the moment. Coming back to you, Steve, I noticed in one of the recent releases, you mentioned expecting the larger part of your future revenues to actually come from your banking as a service partners. I'm interested in what that means for the current Volt consumer app and also your lending plans.
Yeah, so we still will have, I guess you can consider the corporate partners a distribution channel. So customers will be originated either via a Volt app or our web, or they'll come via an introduction of a corporate partner to us. If I think back 3 years ago when we were planning what Volt would look like, I thought a really small percentage of business would come through partners. And now we're quite confident that over 3/4 of our customers will actually be sourced through corporate partners. It's been really, really interesting to see the level of appetite from corporate partners. We've announced a couple of those, and they are with the likes of PayPal and Cotton On, really well-known businesses. And we have a sales funnel of another 10 odd that are signed up, ready to go, and you'll see them starting to be announced in the coming weeks and months, and then a longer sales funnel that we will work through in time. So it's interesting to look at the motivations for the corporates, and they are many and they are varied. But one thing is common, and that is the corporate wants to deepen relationships with its customer bases, loyalty members, and so on. And there's also this now growing sense of purpose, that you need to be helping your customers in a way that you may not think that a retailer would want to help customers live better financial lives. But the truth is they're moving into that space as well. And they want to offer a bank account or bank accounts to their customer to kind of facilitate that engagement that they have. Since COVID, that level of demand from corporate partners to look at moving into the banking space to help their customers has only increased. So it's a really exciting time ahead, and it's been certainly a learning for me over the 3 years. I've been surprised at the level of appetite that corporates have to move into the banking world in some way, shape or form.
And so just so I'm hearing that right, it's really that corporate appetite has developed in the very recent past, rather than Volt just kind of discovering a new vein of opportunity, right? The market has changed quite significantly. Is that?
Yeah, I think if you look at the sorts of corporate partnerships we've seen in financial services, it's usually been credit cards. So you've had Citi, Macquarie, Amex offering airlines and the retailers a corporate credit card, but that's about as far as it has got. You might have seen financial advisors offering client cash accounts typically through Macquarie Bank, but really not in this corporate space to any great extent. But it's amazing how progressed the thinking is of the corporate to say, how do we build this deeper engagement with our customers, or how do we remove friction? Quite often there is a financial services role somewhere in that engagement.
Yeah, right. Interesting.
I think it's really interesting that the three of us are coming from very different perspectives. We've got the focus on the SME market, we've got the focus on the corporate and the banking as a service. We would say, and we're focused on consumers at Up, but we would say that retail consumers, that, for example, we recently launched an API, and the API is not that dissimilar from a banking as a service model, but instead of corporates, we're really providing access to their data for end consumers, for retail consumers. And in Australia, that has been quite difficult for a retail consumer to get access to their own banking data and be able to build their own interfaces, applications, apps, whatever it is, on top of their bank. And I think that's another trend that we'll see. But anyway, I just wanted to make the point that I thought what Jackie said was really perceptive, is that the niche market. All three of us could be going after SMEs, corporates, retail consumers, whatever, but actually each of the organisations has chosen a specific niche, a specific focus, which means that we're able to deliver because we are focused on improving the lifestyle of those customers, improving the outcomes for those customers, and not being a jack of all trades for everybody, as Jackie was saying. So I just wanted to add to the mix when we were talking about the banking as a service, that the model that we've rolled out with the Up API is actually not that dissimilar to what Volt are doing, but instead of for corporates, we're doing it for retail consumers. And we've had over 1,500 consumers, and just customers, we call them upsiders, in the last few weeks sign up to our API and start building. We've had over 1,000 apps already built in just a few weeks. And so I think that the momentum and that shift in attitude and acceptance of these types of different models has actually changed dramatically in the 3 years that, since Steve and I had those discussions about using technology to disrupt banking.
Yeah. Yeah, I actually wanted to ask you about that API launch. That certainly got a lot of attention this year. And I noticed actually a video posted, I think, by one of your marketing team, who'd managed to automate his family finances to an extraordinary degree. But I'm interested in, whether there's any sort of surprising insights you've got so far. You mentioned, the large kind of adoption of that. Any interesting insights that have emerged that for you kind of, are a light bulb on, hey, actually, this is something new we could do to help our customers? And, how do you see, at the moment, it looks like a lot of experimentation being done by people with, interesting ideas like your own marketing guy. What does the longer term kind of use of those APIs look like?
Yeah, I think that definitely in the short term, like right now, it's the sort of the early adopters, the software developers, the people that are comfortable accessing their banking data and building apps and that sort of stuff. So at the moment, we are seeing some really quirky and amazing out there sort of things. We've had people integrating with their home automation system so that when they transfer money, their lights turn on and off, or their sprinkler system, goes crazy. We saw a charitable one where people could donate money to vote for a song in Spotify, and it would move up the Spotify playlist, all these sort of things that you would never think, a bank would never think of, and you probably, in an innovation team, you probably wouldn't think of that. So I think that at the moment it's fairly early adopter, it's fairly crazy, it's unique. Yesterday I saw one that was a full banking system that was built in a terminal, as in like a computer terminal, so that it was all text based. And of course, we had that in the 1960s with mainframes and 1970s. And now that retroness is kind of cool. And so instead of building a mobile app, someone has come along and built a terminal app of Up. And I just think that sort of, ASCII-based approach and everything is not going to have mainstream appeal. But it's kind of cool that people are experimenting. So I think that's the first part of the question. The second part is, where do we think it'll go? We think that empowering consumers to have access to their own data without having to use an intermediary is actually supportive of the open banking, the consumer data right, a vision and expectation and the ideals. It's just that that's going to be a lot slower moving because it requires all of the financial institutions, particularly the big four, to adopt it and implement it over the coming years. Whereas with our own sort of proprietary API, so we do support the open banking CDR stuff as well, but with our own API, we've been able to empower consumers in a matter of months rather than years. And I think that what we can do there is experiment and then deliver those innovations. So some of the things that we might have seen that we wouldn't have thought of is that, we probably underestimated, we're a mobile only bank, so we probably underestimated the number of sole traders that have a personal bank account but are also operating a business. So they have requirements beyond just the general spending and saving of a regular consumer, because they do, they do want to do their BAS, or they do want to update Xero or MyOb, or QuickBooks, or one of their accounting packages. So we have seen through the development of the apps for the API, people filling in the gaps of the things that are on our future roadmap, or filling in areas that we sort of hadn't thought of yet. And I think probably one of the insights would be that there's 2 million small businesses in Australia. We don't see them as our immediate targets because we're going after sort of the retail market. But there is this crossover, this overlap between the small traders, maybe the mum and pup sort of shops, the sort of 2 or 3 people operation that generally use a personal bank account to run their business. And I think that will be a real growth area for us, and certainly for the API in the coming years.
So we just heard the unofficial announcement of Up 2.0 for sole traders. So maybe moving to you again, Steve, that, we've talked about CDR a little bit there, and, that was a key milestone this year. I think everyone's aware, the primary purpose of that is to promote competition in the industry. From your point of view, how do you see open banking, or more generally CDR, helping Volt serve customers and particularly, compete with the majors?
I can't wait. It's been a long time coming. I don't think it'll be just a walk in a park where new competitors like 3 businesses represented here today suddenly through CDR are going to take this huge amount of share from the incumbents. But it will help. And remember, consumer data right. Open banking is first step. Then we go into energy, and then we go into telco. So it's consumer data right. It's consumers' data. It's not a bank's or another business. Here's how I think it will play out. So we're now up and live in the first iteration. It is so cool to look at our test app that customers will use, and they can see their whole banking universe. They can see the interest rates that they're getting. If they've got a savings account where they only get a good rate for a few months, or they have to deposit a certain amount to get a bonus rate, if they've missed that, we show them. We show them what they could have earned in Volts in comparison, and then help them out with utility bill switching, help them out with budgeting, real-time data analytics. It is cool, but it won't happen overnight. So first step of open banking is for customers to trust that their data is going to be transferred and held securely, and that's kind of a big point of open banking. Then the customers will want to know about data privacy, and look, you're not going to spam me if I give you the third-party access to my data with different banks. You're not going to then spam me every second day, are you? And we'll overcome that. The more interesting challenge, and the one that takes longer to work through, is consumers are getting very savvy that their data is valuable, and they're not going to hand it over to a third-party firm unless that third-party firm can clearly articulate what the value exchange is. So if I give you Volt Bank access to my banking, credit card, lending data, what do I get in return? And that's where we show you, look, snapshot of your banking universe, quickly point out where you can get better deals, ditto with telcos, and in time, insurances, energy bills and those sorts of things, but also showing you where you could get better deals on your spending, quick decisions on lending and all those sorts of stuff, where it will be easier to articulate. I think in the UK, where we all look at for the pioneering of open banking, it was that third phase, the value exchange, that particularly the third-party competitors like a Volt hadn't thought through. They thought that customers would just rush out and hand data over, and they didn't. It's certainly picking up in recent months, but it did take time, and I expect that will be the same here in Australia. But I can't wait.
And Jackie, moving to you. So most of the discussion and some of Steve's commentary there with open banking seems to focus around the consumer. Do you see open banking and maybe longer term the open data environment making a real difference to how Judo can serve your SME customers?
Absolutely. And we kind of look at it is open banking is one piece of the broader open data opportunity, but it's actually going to make it easier to securely access and share bank data like statements and elements like that, which is a win for us, and it's also a win for our customers. But we probably think the broader, more exciting opportunity is accessing unique data from other third-party sources like cloud accounting, packages, ERP platforms, CRM systems, and that will help us to actually paint a more complete and accurate picture of our customers. It'll actually help, it sounds strange, but it'll actually help us build further on our relationship model, which is core to what we do. And I think, you're talking to the CRO. So for me, it'll actually transform how we manage credit risk. Credit risk is always a very backward-looking thing. So how do we take it from being a reactive, portfolio-driven to being much more proactive, leveraging that live data to better predict outcomes? So I think that part of that will also then give us greater transparency about pricing and help us price more appropriately for the different risks that we take on. So yes, a lot of the conversation right now is very much in the consumer space, and probably the benefits for SME is further into the future, but there are benefits that we can access now and start using that and be able to build on that for both ourselves and our customers.
It's amazing, just how powerful data used well with digital, to Jackie's point. And drawing on one of my own experiences, prior to Volt, I worked at and run lending in Barclays Bank in London. And we had a hell of a time after the financial crisis with bad debts, lending money to people that we didn't know enough about. So we slowed it down and built very quickly what became, and I think in my opinion at least, remains the best retail banking business of scale in the world for a way that it combines data and digital. So Barclays have 16 million customers. They know enough about 6 million of those because of the way that they behave and looking at their data, that they're comfortable enough to pre-approve personal loans up to £50,000, so 90,000 Australian dollars. And the customers are told, when they look at their banking app, here is your deposit balance and your credit card balance. And by the way, you are pre-approved for X dollars at a certain interest rate. And it's done in a very responsible way. So the end outcome of that was much, much lower bad debts than having a human assess every decision. 98% of applications are assessed by the machine. They don't actually go to a human to have the lending decision made. So the cost to the bank is much lower. Net promoter scores of the consumers themselves are amazing. And to get the loan, it really is 6 clicks. How much do you want to borrow up to that limit? What a term, your 3 year, 5 year, 7 years. Confirm that your circumstances haven't changed in the last 12 months, because it is that data set upon which the lending decision is being based. Confirm you don't expect to have your financial position to deteriorate during the loan term. Accept terms and conditions, press submit. The money is in your account that quick, as opposed to the old paper-based system and would get bank statements and still didn't make good lending decisions. So data used well not only will give a much faster and a better outcome, a customer experience, it'll actually make better affordability decisions as well. So the power of data is quite incredible.
So talking about a different kind of data, Dom, it seems like Up has also been investing in some other data processing and collection capabilities. I know playing with the app, I've seen a couple of feedback screens around, transaction details and merchants particularly. I'm interested in how important you see that kind of, merchant enhanced information and particularly categories to the overall goal of helping people with, their financial well-being.
Yeah, I mean, from certainly from our perspective, we've been building that capability for more than 7 years now.
Wow.
So it's something that we think it's the best merchant database in the world. There are companies that exist around the place that's all they do. So companies like Plaid in the US, or recently obviously acquired, or companies like Look Who's Charging, also in Australia recently acquired. There's companies popping up in Europe that are doing this. We've been doing it for a long time with millions of customers and billions of transactions. And with Up, we've been able to extend that categorization and automation of data collection to the end customer as well. So upsiders are prompted, and we can crowdsource to validate the sort of automation that we do in terms of the data recognition. Now, the reason why I think it's absolutely critical is that a lot of the Up features that we ship very, very quickly. So we're shipping, half a dozen releases to production every day. So our customers are getting new features all the time. One of the reasons we're able to do that is that we don't, it's the old adage of rubbish in, rubbish out. So open data, open banking, consumer data rights, it's all fantastic until it actually happens, and then you get the data and you can't do anything with it because the data is so anonymized, or it's so unrecognizable, or it's uppercase characters that don't mean anything, or it's got asterisks in it, you don't know what they mean, all this sort of stuff. So we've been working with that data, as I said, for sort of 6 or 7 years, and now we are able to interpret that data and deliver things automatically. So we categorize transactions automatically without having to interpret them, because we know the merchant. We know the merchant because we've taken years to not only crowdsource, but also to automate algorithms to calculate the merchant based on all the merchant purchase data, the POS data. We did a partnership with Afterpay. The partnership with Afterpay provides us with access to SKU data, so actual products that you purchase in store. And that means that we can be more transparent with our customers, and then that helps our customers to identify the merchant. So for example, if you buy a pair of jeans and you use your Afterpay with Up, then it'll say you bought a blue pair of Levi's size 42 at Myer. But if you use a regular bank to go and buy those same jeans, you don't know it was Myer, because it comes up as Acme Proprietary Limited, and you have no idea what you bought for $164. So I think that the data itself is actually not that relevant, and the data itself needs to be interpreted in some way. And we've spent a lot of time and a lot of energy doing that. And now we can have these cool features like automatically splitting your salary, because we recognize who your employer is, automatically classifying transactions so that you can do your end of month return. So there is, I think, to the points that both Jackie and Steve were making about the difference that data will make in an open data or a consumer data rights sort of world, is astronomically better when you understand the data. And so we've spent a lot of time focusing our effort on that problem, so that we can be sort of world leading in the way that we get that data, not just from Up, but from other potential partners and financial institutions, and then deliver that to customers. I'll just say one other thing. I think that business models that we're going to see evolving, we've seen it happen in sort of, the web world and search and things like that. So Google and Facebook and companies like that take consumers' data, and then the consumer is the product. There's a real risk of that happening in the future in the banking landscape, to an extent. And so we've made a promise to our customers that we only use that data for that customer. So we don't use that data to then go and advertise to customers, or to sell to a third party, or to use that data for some other purpose. What we use the data for is to deliver a better experience for that customer whose data it is, and then in an aggregate sense to build a better solution so that all customers benefit, for example, with that merchant identification. So for us, what you do with the data, your ethical approach to it and your business approach to it, I think is as important as whether or not you can interpret the data, which is as important as where you get the data from. So I do think it's a multi-tiered approach, and it's not something that can be sort of solved in one fell swoop. It's actually something that needs to have a really strong strategy, and it needs to be basically the foundation that powers the future of user interaction, of features, of delivery and integration with accounting services, CRM services, ERP services, and so on. So yeah, I do think it's a very important aspect. It's not just the data itself, but then the processing, the identification, the enrichment, the categorization of that data is just as important as the raw data.
Yeah. Well, you're getting into some sensitive personal information there, right? There's a few of us that might not like or might be concerned about our gene sizes being revealed.
COVID.
But yeah, especially But a question on the merchant data, right? I was, on holiday in Kiama last week and contributed a new coffee shop to your database, so thank you. But I've played with PFM tools over the years, right? And there's always, it's never quite complete, and we all talk about, our match rate is X%, and X is always less than 100. And I guess a question is, somewhat of an outsider perhaps is, if it's so useful, would it make sense, working with the government, because all these businesses have to be registered somewhere, and then someone else is managing their acquiring terminal information. Would it make sense for there to be a common pool so that we have complete data and it's 100% up to date all the time? Because there's all, especially at that low end of SME, there's a lot of churn, right? Coffee shops open and close seasonally and so on. What are your thoughts on that?
Well, I think first of all, I'll just start by saying that in the 7 years we've been working on it, we have a database of over 1 million businesses, but only 150,000 of them are fully identified with all of the data that's required. You only need a few hundred to be identified to represent 80% of the businesses in Australia, because the volume is really skewed between the big business. So you think of businesses like Woolies and Coles and Bunnings and Caltex and 7-Eleven and so on. So you only need a few hundred to actually cover most use cases for most consumers in their day-to-day life. But there's an extraordinarily long tail of tens of millions of businesses. In Australia, it's millions, but worldwide it's tens or hundreds of millions. And so I just wanted to start off by saying, we have over 1 million businesses that we've recognised. We have over 150,000 of them that we've identified and that we can forecast and predict, bills for and things like that. So I think that is a foundation. In terms of the question and whether it would make sense for it to be an industry solution, absolutely. It would be amazing. It'd be awesome. What we've found is that mostly because of commercial endeavours, organisations have set out to solve that problem, and they're able to do it quicker than you can in an aggregate. Right. So the example I used earlier was the Up API. We can launch it in a few months. We can have customers engaging in a few weeks, and we can have a material innovation happening. With open banking, it's going to take many, many years. For consumer data right, it's going to take even longer. And we need at least the incumbent, the big four banks, to be on board because they represent 85% of the market. So look who's charging as an example of an Australian enterprise that's been acquired now, I think by Experian. But they worked with 3 of the big 4 banks, and they still couldn't get all 4 of them. And they built a shared database across all of them, and the idea was they also integrated with ABR, which is the government, the ASIC database, so that they could recognise businesses. And I think it was a noble cause, and I think it's a great business, but it's still not complete. It only has 3 of the big 4. It doesn't have broad adoption across the industry, and there's a commercial imperative. It's not government backed. So I think that in a perfect world, the sort of philosophical thesis that you put forward is a good one, but in practical terms, I don't think it really works, and I don't think it'll happen anytime soon. I think that if it could work, and it did work, then it would take many decades for it to be adopted throughout the entire industry, and that just means that really you're going to get sort of smaller, innovative businesses like Up actually innovating in that space, and then over time it might become an industry standard or a solution that's more adopted. But I don't think any time in the next few years that'll happen.
Yeah. Okay. So a different question for you, Dom, about Up's business model. So currently, your customers use Up just on the saving and spending side of their lives, but most of them would be credit users as well. Are you thinking about trying to help them with that side of their life as well?
Absolutely, yeah, for sure. We're in a very fortunate position. So unlike Volt and Zinger and 86400 and the other Neos, we didn't apply for a banking license in the first instance. So when we launched Up, there was no restricted ADI at the time. So that's one we couldn't apply for a license easily. And then once the restricted ADI was implemented, we were already live with the relationship with Bendigo. So I just start with that by saying that we're fortunate because unlike the other Neos, we didn't need to build a balance sheet because Bendigo already have one. So at the moment, we can generate a deposit margin because Bendigo have the credit side of the ledger already, which has put us in a really good stead because we've been able to generate revenue sort of since day one, right? So we had our second birthday this week. since the public launch. So that's very exciting. We've been in market for 2 years. We've been around for longer than that, nearly 4. But we spent a year in stealth while we were going through the regulatory process and everything before the restricted license came in. And so I think that for us, we've always had our eye on how do you build a sustainable, profitable, successful business over multi-decades. We want to deliver. We hope that one day in the future, people will talk about the big 5 or big 6 Australian banks and not the big 4. And we'd like to be amongst that. We're currently on target to be a top 10 Australian bank within the next sort of year or two, if we continue at the current trajectory. So to achieve that level of growth in just 2 years, in such a short time, is fairly extraordinary. Now, we can't survive if we don't offer, if we don't generate revenue, we don't have a margin. So we have to offer credit products or alternative revenue sources. So there's 2 line of sights there. One is, how do we work to deliver the credit side of the equation for customers? At the moment, customers have a home loan or a credit card or a personal loan or whatever with another bank, and then they get their salary paid into Up and transfer the money to the other bank, or they get their salary paid into the other bank and then transfer the money to Up. And for some people, we are just a discretionary saver. So they just put money in and just save for a holiday. For some people, we're a discretionary spender, where they put money in, they might get their salary deposited, and then they use Up as their but they still have a mortgage or a credit card with someone else. So in the future, we would like to, and you can see it on our public roadmap, we'd like to broaden our offering to do wealth management, insurance, superannuation, credit products, overdrafts, loans, all that sort of stuff, mortgages, But for us, it's a gradual process, and we haven't had the same pressures. So we haven't had to raise capital. We haven't had to get a banking license, and we haven't had to launch home loans immediately, like say, 86 400 have already brought it to market. So I think that in the first instance puts us in a fairly unique position. In the second instance, the other lens that we have is that we want to generate revenue that is non-fee revenue and non-margin revenue. And to do that, it's the stuff that Steve was talking about with Volt, where we're developing partnerships and relationships where we can generate what I call third-party revenue or non-margin revenue, which just shifts the banking model a little bit so that we can have more of a SaaS model, more of a technology model, and be successful without having to generate a margin or without having to charge customers fees. And there's many ways to do that. I won't go into it right now, but that's another area that we've really been focusing on.
Sure. Maybe changing topic a little bit, coming back to you, Jackie. Judo has consistently highlighted the funding gap, that exists for SMEs, and I think it's fair to say that's gotten worse this year. Have you gotten any fresh insights? I'm sure your bankers have been working very closely with your customers through this period. Any fresh insights from that, or anything that has caused you to change your approach in helping close the funding gap?
Yeah, look, I think the biggest insight is the resilience of businesses and the resilience of our customers during this. So we're a Melbourne-based bank, and we're still actively here in lockdown in Melbourne, and the resilience of a lot of businesses during this period to be able to retain cash. Certainly they've had the help of government stimulus, but the way they've been able to manage that and get ready for reopening. Yeah, absolutely right. The funding gap we've already seen. If you look at system growth at the moment in the business lending sector, it's negative, basically. And that will continue to during this period because, banks will do what they traditionally do during this period, is that they will retract. So their risk appetite will tighten. You'll see changes in policies. But the most overwhelming thing most of them have to deal with at the moment is the level of repayment deferrals and how they manage that. So that was a great support for customers when it was enacted in March, but it was very much a one-size-fits-all approach. And now we've kind of come through that September period. They've got to manage through all of that. So it was a bit to my earlier comment about access to bankers. People are being of that, what you would call traditional frontline customer management, to deal with these large volumes of repayment deferrals and how they manage that. So I think for us, I would say we haven't changed anything in our approach. In fact, it's the COVID-19 in the last 6 months has probably actually help validate our approach around relationship banking and judgment-based lending. because our bankers have been able to, do a file by file review with each of our customers. We've been able to, give repayment deferrals the same as everybody else, but on a much more bespoke approach. So it wasn't a mandatory, you ring up, you get 6 months. It's, how much do you need? Is it 3 months? Is it working through a number of those things? I think the biggest thing we've probably learnt is, it will be no surprise to anyone, historical data is going to be absolutely no use to us lending to customers over this current period, the next 6 months, next 12 to 18 months. You've really got to start looking at alternate data sources, but also really understanding your customer. And, we always talk a lot about the 4 C's, but that first C of character and how you see businesses and customers innovate and manage through this period will have to form just such a big part of the assessment process going forward, to understand how they can actually survive further periods of this. So look, I think our business is absolutely set up for it. We have continued to lend. There's actually a chart that we use which actually shows, yes, system growth is negative, but we've actually been able to continue to lend during this period, even to customers that you would go, what? You've lent to someone in the hospitality industry during this period. But it gets to understanding that customer, how they've been able to pivot their business during this period. So, how actually for them takeaway works better. And the plans they've got for going forward. So, for us, we've still been able to manage that growth through it, and we'll continue that same approach. There are benefits to being small sometimes.
So I'd like to finish with one question for each of you in turn, if I can. And I plan to steal a question from Peter Thiel. You probably know the question, right? It's about kind of contrary insights. So let me put it this way to each of you. Do you have any views or predictions on the role of neobanks in the future of Australian banking that you find at odds with, what kind of mainstream are thinking at the moment? Can we maybe start with you, Steve?
Yeah, I have to get the thinking cap on. I guess, and it partly relates to the misconception that you talked about. We are in capital raising mode. So quite often you will get potential investors say, look, how are you guys going to compete against the majors? They have millions and millions of customers and they have very deep pockets. Surely they will gobble you up. And you can answer that question with looking at the lower operating cost model of the newer players and how that can then provide competitive pricing and all that sort of good stuff. But the misconception is that you do need to become the 5th biggest player in Australia to be successful, and the answer is you don't. So if in 5 years' time each of us had 1% market share, we are going to have very successful and highly valuable businesses. You don't need to be the 5th biggest player in Australia. So that's the most common misconception I guess I hear in discussions with potential investors.
How about you, Jackie? Is there anything? Sorry, go ahead.
Oh, look, I would say very similar to Steve, because we get asked often, similar questions. But I think there's this view that the neobanks are prone to failure and that they will just naturally fail. There's a high failure rate, or the time they take to get to profitability is necessarily a bad thing. So I think there's so much room in Australia for even more of us. Steve, exactly right. You don't have to be the 5th biggest to be successful. And I think the market is expanding, that people don't want the traditional offering of just going to a major bank and getting all my needs fulfilled there. They want to try different things. So to me, I think that's that's the one, is that there is actually room for more. Yes, there will be some that fail along the way, and that's okay. I think seeing failure of any of the neobanks as a bad thing, because that's how we're all going to learn from that. So, but I think there's a view the failure rate will be higher than I suspect it will. I be. I think the failure rate will actually be very, very low, because the passion involved in these, not just from the people working there, but from the customers, they come to neobanks for a reason. And they may be all different reasons, but yeah.
Well, I'm sure there's many founders hoping that your view is correct. Right? And it sounds like, Dom, you don't need to aim for fifth spot. You can still have a profitable business with.
I agree with Steve. We just like to have a big hairy goal. Our big hairy goal has evolved over time to really be, the number one bank for under 35s is where it sort of evolved to. And at the moment, that is Commonwealth Bank. So we'd need to have a couple of million customers, and we'd need to have, billions in deposits and lending and all that, to be able to achieve that outcome. But we do think that's achievable. So my one I thought I'd throw into the mix is that there is a misconception that the neobanks are irrelevant, not having an impact. They're not sort of making a difference. They're not increasing competition or whatever. And I think that is completely wrong. So from an up perspective, the way, probably worth starting with what we stand for. What's our mission? Our mission is quite simply, I think, we try to lead by action rather than words, because you'll hear a lot of banks say they want to help people with their financial life or whatever, and that's fine. But, for us, it's about helping people to feel empowered, to feel back in control of their money, reconnect with their money, have better financial literacy, be able to do the things in life that they want to do, and just embed banking sort of transparently into that. Now, by having that approach, we've already seen 3 of the 4 major banks in Australia copy the neos or the buy now pay laters or the challengers. And so, CBA actually went and launched a product called Neo. You couldn't really get any more obvious than that. NAB launched a product that looks just like Up, sounds and smells a bit like Afterpay, and is called Straight Up. It's crazy. Westpac have launched a savings account that has pretty much the same interest rate conditions and level that we had when we first launched at Up. However, we have a partnership with TransferWise, and TransferWise are very passionate about, calling out the big banks when they're doing things that aren't transparent. And so, with Westpac savings account, there's a lot of journos publishing the interest rate, and that's great. But what are the conditions? It's a very small deposit. It's a high bar that you have to meet. They have fees on their account, and the fees are more than the interest rate differential. So I think that what we can do as neos is continue to innovate, be honest, be transparent, and we will absolutely get that 1% or that 2% over time. And what we've done is demonstrated that we were the first bank in Australia, out of all the banks, the first bank to do instant issuance of Apple Pay. The first bank so that you could sign up in less than 3 minutes. The first bank to do instant issuance with Google Pay. We were the first retail cloud-hosted bank in Australia. We're the first bank in Australia to integrate with TransferWise for foreign exchange. So there's lots more firsts. I won't bore you with them, but that's what I think that the neos, certainly Up has been leading the charge. We started a year before everyone else, but the neos are having a material impact on the market, and I don't think that we should be ignored. And I do think that we will deliver a competitive outcome for consumers. We'll deliver a better customer experience for consumers. And I'll just finish by saying that, our customers basically say this: Up here, this isn't a bank, it's a party. It can be fun, it can be interesting, it can be exciting. You can reconnect with your money. Banking doesn't have to be boring.
That's great. So thank you, each of you, very much for your time. I think it's been a great discussion. And let me just finish off by wishing each of you and your respective teams very much success as you build your banks.